Guys, what's going on? My name is Ryan. I trade ETFs and I like to make videos on the technical analysis that I'm seeing here in the price action. Today we've got gold, the commodity, as opposed to GDX, the miners ETF. I wanted to always take a look at the actual commodity price action. And last week I did a different kind of segment. I did a kind of story to spice things up in a otherwise slow market called the Battle for Matterhorn. And it starts over here with the price point to beat being about 1309 as this red dashed line indicates right here. What is a Matterhorn? Well, it's a mountain, and it's interesting and a famous mountain just because it's a sheer run upwards and then basically parabolic, and then it pauses a little bit at the top before we slowly, move sideways, and then it's a straight drop down all the way. It's basically impossible to climb up this way, and it's impossible to climb on the front or the sides. Anyways, it's a famous mountain, and it reminded me a lot like this thing. So it's parabolic move up, we have this slight move downwards, and then we come crashing all the way back down. Anyway, so this was basically all the patterns that I had seen over the course of the last 2 years. We had this cup and handle down here. Our neckline came in to be support over here. We had our second cup and handle right here. Our neckline coming in. We broke out. We flagged here. We had a false breakdown before breaking out again. We had the actual breakout. This was when the elections were coming into a close. And then we had this sideways movement, and we had this bear flag right here. This was the election date. We see this high wick came up to about 1340 before we crashed down, and right now it looks a little bit as if we're in a megaphone pattern as we come up here to A, B, C, D, and we have yet to set in E. I have megaphone question mark right here, and I'm skeptical that this is the actual pattern playing out, as we'll see on lower time frames. So going from the daily, let's go to the 2-hour. So the 2-hour chart is very complex, and I went very in-depth with it in a previous video, and I'm going to try and skim over a lot of that, yet still covering the same content right here. But essentially, what I hypothesized, this was going back to when we were at around A and B, is that price would come down to touch this previous support line, and then I wanted a second reason to back that up, and it was because the previous 2 bull runs up, we saw price retraced down to the 23.6% Fibonacci. Came up, retraced down to the 23.6 Fibonacci. What do I mean by the 23.6 Fibonacci? Once we take our bottom, our swing low, to our swing high, this 23.6 marks the bottom. Go ahead and delete that and show that again here on the larger structure. Swing low to swing high, this is our 23.6. And so I hypothesized that we would come down here and set in our swing low at the 23.6 over here. And what did we do this week? It looked like it was a pretty sound prediction. We came down to this 23.6 range and almost perfectly touched off of it. It looks like we touched off of it twice, and I can see us coming back down and testing it another time. So I'm going to go ahead and delete these. It kind of clogs up an already clogged chart. As far as Elliott wave goes, we kind of have a 1, 2, 3, 4, 5. And so for a corrective phase, we would have an ABC, A, B, and C we're setting in right now. We do have this overhead resistance line, and it's acted as resistance 3 times now. So this is a hard resistance line, though not quite as hard as this one right here. So these should be different sizes. And there we go. So this is hard support, and this is hard resistance. So it'd be very bullish for us to break out of this range. One of these has to give. We're coming into a bit of an apex here with the support line and this resistance line converging right here on an apex point. We can see with this blue horizontal line that this is what I've marked as the support line in the near term. And if we do break under this, I don't see a lot further for us to fall unless this long-term support line gives way, in which case I'm going to have to redo much of my analysis. But we will see if my price prediction from midweek, when I did my midweek gold video, kicks in, and that's that we were going to come down and touch this support line and then break out of this triangle here and move way back up here and touch or test this previous high here. So let's go to the 1-hour chart. You can kind of see a different pattern, though it's not quite well defined yet. This could be a descending wedge instead of this sort of descending triangle here. The wedge comes up here from previous resistance zones. This is kind of a neckline for this price action, and we break out above it, retest it, and then we shoot up higher. So this is where I drew my line, and it kind of nicely coincides with the 1, 2, 3, 4 we see here. We could see a 5th wave down, and this could be a false breakout. If we do break this blue line, and then we break this black line, this would be my final price point for gold before I would turn bearish. I said several weeks ago that my first target zone would be 1245 gold, and the second target is 1235. We came down to hit this 1235 very briefly, and I actually missed this buy, unfortunately. But I could see us coming down all the way to about 1233 before I would start to change my opinion on gold's predicted future price path. So from the 1 hour, let's go to 30 minutes. I haven't really looked at this from last week, but we can see I had a couple of sell targets and buy targets. Again, we can see my 1245 buy target. We were supported right here, and then we came back down to test our buy target number 2, which is at 1235. Then I thought we would break down or at the time it looked like price had found a bottom here and it was going to continue to break out and then maybe flag, and this would be my sell target number 1, sell target number 2. But I'm actually encouraged by this price action. It looks kind of like we have a triple bottom here with 1, 2, and 3. So we are forming some pretty hard support zones right around this level. Let's go from the 30-minute to the 15-minute. And on the 15-minute, if we take our swing low here to our swing high, our Fibonacci, we'll see that we are being supported again by this 23.6 key support zone right here. And it's very interesting that it's a reoccurring theme on different time frames. Another somewhat interesting thing to note is this potential for a diamond bottom, though it's not as well defined as I would like to see, but it is still an interesting pattern nevertheless. So we come down, we have 1, 2, 3, 4, 5, 6, 7, 8, 9 touches for the potential diamond bottom. Now, even number of touches for a diamond, say 8 or 10, marks a continuation pattern of the previous price trend, and an odd number of touches, like 7 or 9 or even 11, marks a reversal in the price action. So right now we are sitting on, what was this, 9? 1, 2, 3, 4, 5, 6, 7, 8, 9. We're sitting on 9 right here. This is an odd number, and at the very least, I can see us coming up here and setting a 10. If we do get rejected hard with conviction here at 10, and we break through this red line, this blue line, and this 1233 range, I would see this as a continuation bearish triangle. However, price will tell and time will tell. So that's been my weekly update for the price action and the technical analysis I'm seeing for gold. If you like my video, please like and subscribe. These videos take me a long time to analyze, upload, film myself, post it to StockTwits, and do all the editing. So again, if you like my video, please like and subscribe. Really appreciate it. Wish you the best of luck in trading next week. Have a good long weekend here. I know Monday's only a half day. Happy 4th of July, everyone.